There we go. Welcome, everybody. My name is Corey Riley. I am with the Penn West Clarion Small Business Development Center here on western side of Pennsylvania. Some of you are from all over the United States, or not United States, maybe, but Pennsylvania definitely. We've even had people internationally attend this tax talk as well. So you could be from anywhere. So in today's tax talk with Corey, we are going to first do a quick introduction of the SBDC. I don't want to waste much time with that because I'm hoping that most of you are familiar with it, but maybe some of you are not. And then we are going to touch upon a tax tip, which you'll see there in a kind of a yellow squiggly rectangle. It says receipts in the cloud, ditch the shoebox. So we're just going to talk about that a little bit. I think I've touched on it multiple times in previous tax talks. I just want to show a little more detail with you. And then for all of you that are brand new, I need to explain how this is going to work because sometimes new people come here and they think they're here to watch a webinar. This is not a normal webinar like you always attend. This is a brief tax tip for, I'm going to go to about 11:15, and then from 11:15 to about 12, it's going to be an open Q&A. So you will have an opportunity to ask any tax related questions that you have. We like to try to keep it business based, although I do know that small businesses, it kind of flows over into the personal side as well. So I'll try my best there. And then also, if you have any kind of business related questions, I'm more than glad to help you and try to answer the question today, mostly because um, everything dealing with your business deals with tax. We just have to figure out and say how does it deal with tax, but it all does deal with tax. Okay. Um, so let me just jump into this, and then if this is your first time, you'll see how this flows and start gathering questions. So you can ask me here using the chat, and you can actually start putting it into the chat or the Q&A, whichever one that you want to do. And then um, whenever I get to the Q&A portion, I will start looking at the chats and the Q&As. So a little bit about the SBDC first off. Small Business Development Center. We're here to help businesses start, help them grow, and help them prosper and be a successful business out there. We're here to help you whenever you need help from us. You just have to call upon us for the help. We also offer lots of training events. Most of our training events are offered at no charge. Most of them are online. There are some where there is a cost because it's more in depth or there's training material involved that's going to cost money. And so we have to charge a fee to try to recoup our expenses. But if we can do it at no charge, we really do try to do that. We also offer some in-person trainings as well. So you can check those out and decide if it's close to you and if you want to go to it or not. Our services, business consulting services offered at no charge. We are a nonprofit type that is receives funding from the federal government through the Small Business Administration, through the state government, which is the DCED PrEP program, as well as our wonderful universities. And you're going to see a list of our universities here in just a moment. Also, wow, I hear them working out in the hallway. Also, what we learn about you is confidential, so we're not going to go out there on the streets and talk about you. If we need to talk to one of our partners to offer you further assistance, we always get that permission from you before we do that. We talked about our training. We work with for-profits. We do not work with non-profits. Now, if you're a non-profit, you're here today, please feel free to stick around. I may not be able to answer your questions as a non-profit unless it's general bookkeeping, accounting. But the SBDCs are organized to help for-profits. We help businesses with less than 500 employees. That is the federal government Small Business Administration's label of a small business. And so we help most of our businesses in the area unless they're too big. The SBDC does not have money. We do not have any money to give you, free money. We don't have any loan money to give you. Our job is to offer the business consulting to help you remain successful in the world. And then if you do need funding, we know where to find it, so we can help you go out and seek that financing. Here's our state of Pennsylvania. And so over on the right-hand side, you can see the universities that are so great, so that we're so grateful to them for funding our SBDCs. find yourself on the map, find the number, and then contact that local SBDC over on the right-hand side. That would be the person that you would need to talk to. So I'm from number 7, and therefore, if you're on the eastern side of the state, I'm not your business consultant. I can't be your business consultant. You'll contact your own SBDC. I covered all of this here already, but something to point out at the very bottom is 2 websites. I would definitely go to the one that says pasbdc.org. You can go to that website and you can find um, all of our trainings across the state of Pennsylvania. So that's like the go-to website you want to go to. Then, what are the different services that we offer? Because I told you we're here to help people start businesses, help them grow, and help them be prosperous. And so, wherever you're at on this business life cycle that you see in front of you, we have many services that can help you. And so, if you take a look at this slide here with all the bubbles there are a lot of services that we can help you out with. Now, we're not going to try to knock down your door and say, hey, we want to do this with you or do that with you. You look at this, you decide what help you need in the future, and you reach out to your local SBDC for the help. Okay. I'm going to move on from this slide, but again, you'll be able to watch this video over again and see all of these different slides, or take a quick screenshot of it, so that you can think about more of what you need. So let's get into our tax tip. Our tax tip, let me quit sharing here a moment, and then I'm going to share another screen with you. And we'll get to this screen here in just a moment. There, you should be able to see it. Let me make it bigger. There we go. And yes, you should be able to see that. Okay. So I want to talk to you briefly about storing your files in the cloud. It is definitely the probably best place to do it now, because you don't have to have paper sitting around. You don't have to have storage boxes kept in warehouses for your business, or in your basement, or in your attic. You save them into the cloud, and then you throw away, shred the paperwork that you've uploaded already. So a couple different options for you that I wanted to talk to you about. I use Dropbox. I like Dropbox. I'm going to talk to you about the free accounts. I'm not going to talk about what they charge. If you want bigger storage in that, you can look into that. But to just at least get you started, if you haven't already, Dropbox offers free storage. It is up to 2 GB of storage. You can store files on there. You can store pictures. You can download all of these apps that we're talking about onto your phone, and then you're able to either take a picture of something, or some of the apps have the ability to scan, what they call scan a document, and it turns it into a PDF for you. I would rather store things as PDFs if they're not pictures, because they take up a lot less space. Whereas you can back up your camera images to Dropbox, but it's going to take up a lot of space, because camera pictures do. So free storage, 2 GB. I love it because it's not only out there in the cloud, but I can have a Dropbox folder right on my laptop or my desktop, and I can literally store the files on my computer. So not only is it in the cloud, but it's on the computer. And then any changes that I make to a file that's being pulled from my computer will automatically update into the cloud. And then you can download Dropbox onto your computer, onto multiple computers, however many computers you want. That's with all of these that you can do this. So you have these different backups in different places. Now you can pay for a lot more storage. I think instead of just the 2 GB free, I have like a little over 2 TB free, and you get like referrals. If I were to send you a referral, which I'm not going to do, but if I were to send you a referral, then I get additional storage on top of that. So that's why I have a little over 2 TB, because I think I pay for 2 TB. I store like all of my personal pictures in there, all my wife's personal pictures. I then of course store all of my other personal stuff, such as my car registrations and my car insurance, health insurance, eye insurance, all these things. I also store all of my business stuff on there as well. So I just have it all in one big lump account. Okay. So that's Dropbox. Then I want to talk to you briefly about Microsoft. So you can get a Microsoft 365 account for free. If you get a Microsoft 365 account for free, you not only get the web and mobile versions of Microsoft Word, Excel, PowerPoint, OneNote, OneDrive, and other apps, which you might not know what all of those mean, but hey, they're free. Take it. You also can get an Outlook email and an Outlook calendar if you don't already use like Gmail or something. But you can also have, which I have, like I have Outlook on my computer, but then I have some Gmail. I have a Gmail account that comes into that Outlook account. Um, and so anyhow, it gives you 5 GB of storage. Again, this is free. 5 GB of storage, and 15 GB of mailbox storage. So I'm not one that stores a bunch of stuff in my email, but I know other people do. They have all these folders on the left-hand side or something, and that's how they store stuff is within their email. I'm not that kind. I'd rather do it into the cloud, into folder, other types of folders on their own. Um, Microsoft 365 says for one person. I think they all would be for one person. But like I said about how I have Dropbox on multiple computers and I actually have it on a couple different phones, I basically just sign in and under the same username and password, and it's all shared across all those computers. So to me, it doesn't matter. That's just for one person. So that's Microsoft 365. That's pretty strong to have all of those apps. You also have that 5 GB of cloud storage, and along with that, you have OneDrive, which is part of that storage. So the Microsoft 365 is a great program. We use it here at the university. Everything we have here is Microsoft. So I really do like Microsoft. If you're an Apple user, you probably already know about iCloud storage. So iCloud storage offers 5 GB of free storage that you can use that you can store stuff in. After that, you're going to have to pay for it. I don't know a lot about iCloud because I don't have Apple. I've helped my daughter a little bit with it. Most of the time, you're backing up, especially with your Apple phones and that, you're backing up your pictures to the iCloud storage, and so 5 GB is not going to get you very far. You're going to have to subscribe to a lot more storage. If you're using it for business purposes, though, you may want to see about if you can have a separate iCloud storage account that you can just use for business, and so then 5 GB would go quite a ways. Last but not least, because I want to try to finish up here by 11:15, is if you're using a bookkeeping system. Of course, the most popular one is called QuickBooks or QuickBooks Online. And so QuickBooks Online offers unlimited storage of documents within QuickBooks Online. You can use the app just like all these other ones and take pictures of them, scan it, and it will upload directly into QuickBooks. And actually, when you upload into QuickBooks, it reads that receipt if that's what you're uploading. Most of the time, I guess in QuickBooks, that's what you would be uploading is receipts, and then it can create a transaction for you within QuickBooks. The only catch about QuickBooks and other bookkeeping systems, and really any of these, I guess, is once you quit using them, you lose it. Okay. You can download the stuff from all of these, including QuickBooks. You can download stuff. But that is the kind of the catch of the world today is everything subscription based, and you have to keep using it or else you're gonna maybe lose the stuff. So the next thing I want to show you is what's on your computer screen right now. You can use all kinds of different folders within your bookkeeping system, record keeping system, I should say. And so I wanted to give you just a quick example of what I'm using in Dropbox. I have a client folder. Each of these are folders that you see here. So I have a client folder. Within the client folder, I have listed by number. I've been in business for like 18 years. So I have a lot of clients. Okay. But I have each client folder listed by number, last name, first name, and then within each of those client folders, I may have other folders in there. And then finally, at some point within a folder, I'm going to have documents that I have scanned or I've created through Microsoft Word or Microsoft Excel. Then I have a knowledge base folder. So knowledge base is something that you want to track that you've gathered, and you want to use it to look back at someday to help you be, help you do your job. Okay. So different folders within the knowledge base folder. And then within those folders underneath the knowledge base folder, you'll have documents saved in that folder. Then this one here I was a little more detailed with. This is dealing with your own business, okay? Your own business record keeping. So if you have employees, then you have applicants. That's what that folder might be. uh, if corporate account information or business formation information is what that second folder would be for. Then maybe an EIN folder, which you could put the EIN folder within the corporate account info folder if you wanted to. Um, I have a folder for employee manual. I have a folder for employee training. You could maybe combine those if you wanted to. I just quickly typed these up from looking at my folder. I did see some changes like, yeah, I need to kind of move this around, move that around, compress these things here. Insurance. Within insurance, I have folders for the different insurances that I have. So business liability insurance folder, workers' compensation insurance folder. And then within there, I'm going to either have more folders based on years or I would have documents saved in there. Leases, I rent a place, so I keep my leases in the leases folder. Marketing, any kind of marketing that I'm doing, I have multiple folders in there, depending on each type of marketing, like if it's a radio station or if it's a newspaper, um, or if it is Facebook, I have a folder within there for Facebook posts. Payroll processing, if you have employees, this is where you keep track of all of your um, payroll pay stubs, your payroll reports for each pay period. Also, you have payroll processing, payroll reports, W-2s, W-2s there. Let me see here. Prices. I have a prices folder that I keep track of what my pricing is, and I can go into and I can update it, and I keep a track of it by year. So I have different folders for years as well. Last but not least, tax records. This is I kind of dove a little deeper into this one because y'all have to deal with taxes, right? So I have within my tax records folder, I have a folder for each year. Okay, so 2020, 2021, 2022, 3, 24, 25, 26. And then within there, you can have different folders. So these are three of the folders that I have in there. I have a receipts folder so that I scan or take a picture of every receipt that I have if I got it in the mail or if I'm out eating somewhere and it's a business expense or something, I'll take a picture of it and get it uploaded right into my Dropbox into this receipts folder. And then how do I name it? Okay, with a lot of my files, I want to make sure I have the date. Yeah, within your folders you have modified date, but that could change. So if what today's today, so something like this, 2026, the month, the day, double digits, and then either use a space or no space and type in a receipt. Let's just say like McDonald's, and then just save that document like that. So that might be something that's within the receipts folder. Then you have sales tax. If you're a business that charges sales tax, then within the sales tax folder, you're going to have folders with different years. 22, 23, 22, 2022, 2023, 2024 within there, along with any with those documents that you save as PDFs from filing your sales tax. And I would use a date order, just like I showed you down here. I would be using these date orders as well. Then last but not least, if we're within the tax records 2024 folder and we're within the tax return folder, then I'm going to be saving in this tax return folder my tax return that I had completed by somebody, as well as any other documents that is pertaining or supporting my tax return. So maybe like my profit and loss statement and my balance sheet would be saved within that tax return folder as well. So I, of course, went over. It's 11:20 instead of 11:15. I hope that you found this useful. A lot of times people like using um, one or want to use a storage mechanism such as Dropbox or OneDrive or iCloud, but then they get to this next part, the folders, and they're like, I don't know how to store stuff within these cloud storages. So I wanted to show you that quickly to give you an idea. And if you ever have questions, your business consultant at your local SBDC can give you some suggestions as well. Okay, so I'm going to stop sharing and you get to see me great big now. Okay, we're going to get into the Q&A. And again, if this is your first time here, you're like, I don't know what this is still. I use the chat option, use the Q&A option if you want. And the idea of today is that you get to ask me questions. and I try to answer your question off the cuff with the information that you're giving me. And so with that said, let me read a little disclaimer to you really quickly. And the little disclaimer, which you would have seen when you signed up, says any advice shared reflects our professional judgment based on our current understanding of tax law. This service is offered at no charge, and the SBDC is not responsible for misinformation. So we're here just trying to help you, trying to give you some guidance. I do have an accounting education, accounting experience, taxes, business operation, things like that. So I do feel I can answer your question. I've been doing tax talk for quite some time now, and we have people that keep coming back. So I must be doing a little bit of an okay job. Okay, so let's see here. Someone is asking um, for an online tutoring LLC owned by a single owner and having no employees. Are there any federal tax requirements that I would need to be concerned beyond just filing individual income tax, since I would be the only owner? Anything at the end of the tax year or throughout the tax year? Okay, good. So you have no employees, no payroll. Don't have to worry about that. Um, Online tutoring. I don't know if that is a sales taxable service or not. I would have to look that up, or you may already know the answer. So if you are not required to collect sales tax, then you don't have to worry about that either. Um, the next thing I would think about from a tax standpoint would be just your normal income taxes that you're talking about. If you are making money and when you have your tax return done at the end of the year by your accountant, if your accountant determines that you owe money to the federal, state, or local government, or that you're getting close to owing money to them, then they should be having a conversation with you to talk about the future of your business, to say, okay, this is where you ended up this year. Where do you think you're going to be at this coming year that we're in right now? Do you think your sales are going to grow even more? And what about your expenses? In your kind of business offering online tutoring, you may not have a lot of operating expenses. You have some, I'm sure, but maybe you don't have a lot. And so maybe you show a big profit based on what you charge. And so anyhow, your accountant's going to determine if they feel you should be making what we call estimated quarterly payments. And if you do, then they're going to make up vouchers for you. Your accountant will do this with you at tax time. They'll make up vouchers, four for the federal government, four for Pennsylvania if they deem it necessary, and four for the local government if they deem it necessary. And it'll already be filled out, already have dollar amounts on it based on their expertise of what they feel you should be making in quarterly payments. And they'll and then it becomes your responsibility to make sure that you send them in by the due date. And then your accountant will ask you come next tax time to say, did you make your quarterly payments that we sent you? Or that we gave you. Your accountant won't just assume that you did it because, it's optional. But understand that if you owe too much on your tax return at the end of the year at tax time, that you can get penalized. So the federal government, they will forgive you if you owe less than $2,500 at tax time, they won't penalize you. But if you owe more than that, they will penalize you. And then once you get in the process of making quarterly payments year after year, if you don't continue doing that, but it's necessary because you owe money, then they'll penalize you there as well. So you got to keep making those until maybe you get to a point that you no longer owe money, you start getting refunds. The state can penalize you if you're over $250. So $2,500 for the feds, 250 for the state. Local, at least in my local area here in Western PA, I've never seen a penalty for, sending in a check at tax time, even for larger dollar amounts, but they do have requirements there. I'm just not sure what that number is. Okay. Let me see. I have something in the Q&A here. When making, and please keep using your chat, keep using your Q&A. I mean, I will talk and keep talking about business and business taxes if nobody has questions, but this works way better if you have questions. So when making products in your home, but storing, assembling, and mailing from a different location, can you file taxes with personal tax and business tax? Should you ever file personal and business together? Well, absolutely, depending on the type of business that you are. If you are a sole proprietorship, then your income and expenses go on what we call a Schedule C, which is part of the tax return you're filing right now, which is called your 1040. So yes, they are definitely together. in a sense. If you are a partnership, you could be, so let's back up. If you're a sole proprietorship, they are together, like I just explained. If you're an LLC sole proprietorship, they're together, like I just stated. Now, if you're an LLC partnership or just a general partnership, there is a separate tax return that you file, and then the profit or the loss from that partnership tax return does actually come onto your personal tax return. So it kind of becomes one again. If you are an S corporation, you file a separate tax return, and then the profit or loss from that S corporation tax return does flow over onto your personal taxes, and it kind of gets mixed together again. So for most business structures, they do come into your personal tax return, like the profit or the loss, which is like your bottom line. After you subtract away all your expenses from the money you made, the bottom line comes over onto your personal tax return. Now, if you are a C corporation or like a regular corporation, I normally think of like the big companies out there. Those are our corporations. They file a separate tax return. They file an 1120, which is a corporate tax return. The corporation files its own taxes, and then you are an employee of the business, so you receive a paycheck from it. You also might get dividends from your C corporation. So some of that profit or loss comes to your personal tax return, but not all of it. So most businesses are not C corporations. Most of you are sole proprietors, partnerships, or LLC sole, LLC partnership, or you're an S corporation. You can even be an LLC S corporation. Let me see here. So let me just to touch upon yours a little bit more, making products in your home, but sorry, but storing them and assembling and mailing from a different location. So a different location, you might have rent involved unless you own that building, then you're paying on that building. You have utilities for that individual building and all the expenses surrounding that building. If you're doing stuff in your home, if you are making the products in your home, you could have what we call a home office within your house, and therefore you have to write all this down because I can't do a PowerPoint for something I'm talking, off the tip of my tongue. So you would take the square footage of the space that you're using to be a maker. Maybe that's a 10 by 10 room. So that's 100 square feet. So you'd write down 100 square feet for my office. And then you look at your house and you determine the living area of your house. And you might say that that's 1,500 square feet. So 1,500 square feet. So you have those two numbers, 100 square feet, 1,500 square feet. The next thing that you're going to do um, is keep track of all of your utilities, electric, water, sewage, um, heating like gas and propane and heating oil. You're also going to keep track of your telephone within your house if you still have a landline. You're going to track your TV. You're going to track your internet. You're going to track your garbage disposal. You're going to track your real estate taxes. You're going to track your homeowner's insurance. You're going to track your repairs and maintenance on your house. So a lot of information, a lot of stuff you have to track, okay? Then you give those totals for each of those items from that list and you give it to your accountant. Your accountant is going to do some calculations for you within their program. So don't you do the calculations, they'll do it within their program. They're basically going to take 100 square feet divided by the 1,500 square feet. That'll come up with a decimal. And then they'll take that decimal and they'll multiply it times each of the totals from that list I gave you. And they will put it in where they need to put it to the program, their tax program. And then you will get what we call a home office deduction on your business tax return, your Schedule C. With that said, a home office deduction, and this is why you need to pay someone to do this because you may not know this. A home office deduction cannot bring your business profit at the end of the year, that bottom number, it cannot turn it into a negative. You can only take enough home office deduction to get your profit down to zero. And that's assuming that that the home office deduction turns out to be more than what your profit is currently showing. Now, then what's left over, you can carry forward into future years. And so if you have an accountant taking care of this for you, they will keep track of this for you going into the future. Um, Going a step further with outsourcing it to an accountant, okay? I'm suggesting that you use an accountant because technology is great, just like AI is great, but it's the human in the loop that makes it work. And so you can do your own taxes, absolutely. And I'm all for DIY, do it yourself kind of stuff. But if you don't know this stuff very well, then you may be missing something. I know somebody that on a personal basis, they miss thousands of dollars on their tax return each year for multiple years because they didn't know about a particular credit for their personal tax return. And it took them finally talking to an accountant to find out that, oh, you've been missing this. Now I got to go back and change my past years to get all this money back from the IRS that is to be paid to me. They would have never found that out if they wouldn't have talked to a human being. If they would have just did it on the computer like they did do it and just kept going on. So it is beneficial to pull an accountant into this. And then also build a relationship with an accountant. I'm not telling you, you don't have to talk to them throughout the year. You can. It can be very beneficial for your business to talk to them on a quarterly basis or something, but at least have a relationship with your accountant. And if you're pretty happy with what they're doing, I would suggest sticking with them. Anytime you move from place to place, then you end up losing information, you lose history, and then the next accountant may not be helping you as good as that previous original accountant could have been helping you because the original accountant knew what was going on in your business, whereas the new accountant doesn't have the whole picture yet, and it might take them a couple of years, several years to get the whole picture of you and your business. So I guess what I'm saying there is I think accountants should be, as long as you're happy with them and everything, should be one of those things where you're not just out price shopping constantly. Okay, go price shop insurance, but even you price shop insurance, you lose benefits from an insurance company you're with. I mean, I've been with the same insurance company for decades, as long as I've been driving. I've priced them around. They actually have been better priced, but I know that if I switch to another company someday, there's a lot of benefits I'm going to lose. And therefore, I might be willing to pay a little extra to not lose those benefits I have with that insurance company. So it's the same thing with an accountant. Let's see here. I have another question here. Hopefully I answered your question well and went beyond, but if you still have more, please use the Q&A or the chat. So this next one here says, are you required to keep track of all business expenses for federal income tax filing? Or is it just like a courtesy you could choose to take advantage of to enable you to decrease your taxes owed because of your business expenses? So really the law says that if you make a dollar, claim a dollar. If you have a dollar expense, claim the dollar expense. You're supposed to claim it all. Okay, that is the way the black and white of the law works. So yes, you're required to keep track of all business expenses for income tax purposes. As for the courtesy thing, so I have seen it where people have said, I have too many expenses for the income that I'm showing. That's a question and a conversation you might have with an accountant or someone. If you have like way too many expenses and not enough income to pay for it, you're either failing, maybe you're just in the startup stage as well. That could be an option. It also could be that you're taking a lot of cash under the table and you're not claiming all of your income, and yet you're trying to claim all of your expenses. So I know people have, finangled their expenses around in the past. Not something that you should do. Of course, there's the black and white of the law. You should follow the law as is. Um, if you ever get audited, two things. One, the IRS in Pennsylvania, they are professionals at knowing roughly how much you should charge, how much you should make. And so if they're good, if you're a cash-based business, they are good at determining how much cash you are truly not claiming, if you're not claiming any, if you're not claiming at all. They are very good at figuring that stuff out based on tax returns, based on the amount of expenses you have, and they can require you to turn over your bookkeeping system, such as QuickBooks, or if it's on paper or Excel spreadsheet, you have to turn that stuff over by law. Also, they can require you to turn over copies of your bank statements. So in this case here, where you're saying like, is it a courtesy, to take advantage of? By law, again, yes, you have to claim the expenses. And so if they want your bank statement, they will see every single expense that you've been paying out of your business. So if you're not claiming it all, yeah, you're breaking the law. And if you're not claiming it all because you're taking a lot of money under the table, then they're going to figure that out as well, because they're going to be like, how are you paying your bills if you don't have the income? Okay, so hopefully that helps out here. Let me see if I missed anything else. Maybe decrease taxes. Yeah, I think I got everything there. Any other questions? Everyone's sending their questions to me in chat, just to the host and panelist, which is me, so that only I am seeing it. Nobody else is seeing it. And then also, if you use the Q&A, it's only coming to me as well. So nobody knows your name or anything like that. Okay, so I have a Q&A question. Do, do the Does the SBA supply a list of accountants? If not, what exactly should we be looking for when hiring an accountant? Difference between an accountant and CPA, which should we use? Wonderful questions. Actually, all of them were wonderful questions. I absolutely love answering these questions. So, does the SBA supply a list of accountants? On their website, I'm not really sure. You'd have to go to their website and find out, I guess. But I think the best thing for you to do there is, one, go to the internet and look for accountants in your area. So if you live in Pittsburgh, then QuickBooks or Accountants Pittsburgh, PA. Or if you live in a rural area like Clearfield, then Accountants Clearfield, PA, and you'll get a list of accountants. And it'll give you a list beyond even that area, so you can reach out more if you wish to. I think it's a good idea to have a pretty local accountant, so that they're easy to get in touch with. You can go stop by their place and talk to them. Versus if you get an accountant, an hour or 2 hours away, I mean, you got to drive a far distance just to go see them. Okay. And I'm not saying you need to talk to them in person a lot. You can do phone calls, emails, texts, all that kind of stuff. That's the way of the world today. But I do think it's a good idea to stay more local. Plus, if you're a small business, you expect everyone to stay local with you too, right? So why not act the way that you're speaking? And then, what should you be looking for when hiring an accountant? Definitely, if you have, depending on your business structure, sole proprietorship, partnership, LLC, S corporation, ask the accountant if they have experience with those types of businesses, because some accountants may specifically be just doing individual personal tax returns, not really diving into businesses at all. And then even more so, there's some that say, nope, won't even touch partnerships and won't even touch S corporations. So just ask them that question. Find out how many years they've been in business. Check them out online. See if they have any Google reviews. See if their Facebook or other social media is active, and see if they have a website. Make sure it all looks good, looks proper. If somebody is using their professional Facebook page to, you know, say bad things, do bad things, do things that you don't support, then the would be an accountant you probably don't want to go to. There is an IRS website as well. I'd have to look it up, but there's an IRS website where you should be able to look up every tax preparer, not so much accountant per se, but a tax preparer, and see if they are in good standing with the IRS or not. And if they're not on that list, then you probably should not go to that accountant, because they should be paying a fee to be on that list every year. And then difference between an accountant and a CPA. So, most accountants, when I think of an accountant, I think that they went to college. They went to a 4-year college and got an accounting degree. And the difference in that case, because accountants and CPAs all went to a university and got their college degree, the CPA took it to the next step, and they studied for a big exam, and they passed that exam and got a certain amount of experience before they could get a special license called Certified Public Accountant License, which they then have to do professional development every year to stay up with certain things, and pay fees and such in order to keep their license set up. Now, I will say that, I'm an accountant. I mean, that's what I went to school for, my education, my experience. Although I am not a certified public accountant. I've always told people over the years that I would put my education, my experience, my knowledge up against other people that have the label CPA after it, even though I'm not a CPA. So it goes kind of on the level of the person's desire to continue learning and have the experience. Okay. I am a member of, and I won't say what, but I'm a member of an organization that CPAs here in Pennsylvania are part of, and they have like a listserv, like a email listserv where like someone asks a question and it goes out to everybody that's on this group, and then people can respond to it. And I look at some of the questions asked by some of these people, and it's like, really, you don't know that? I mean, that is simple, and you don't know that. So, but again, it goes on the level that the person wants to pursue. So therefore, I would say accountant or CPA, either one's good. If you go back to what I said earlier about asking questions of them, finding out what their knowledge is, what their experience is, are they helping other businesses currently? That's where you need to go to find the help. And general accountants will be lower cost than CPAs as well. Now, I'm not the biggest fan, although I can't speak for everyone across the state. But some of the big box stores make sure that they have experience is all I would say, because I do know that some of the big box accounting stores, they will hire you and other people off the street, give you some training over a short period of time, and put you out there and start doing taxes. Now they'll review everything that you do and train you up and such, but watch out for that to just make sure that they're overseen by somebody. Okay. What should we use? I think I answered that. Good. If you have further questions about any of these, though, please put it in the chat or the Q&A. And I will say, from what I'm hearing, accountants are hard to come by right now. A lot of them are getting up there in age. A lot of them are maxed out with clientele that they're not accepting new clients. I'm starting to hear that way more right now. So we have young people in our office here that work for us at the university, and I don't know how many of them are going for accounting, but I think that the accounting jobs are ripe for the taking right now because there's just not enough of them out there. Let's see here. So someone's saying here, if you have your online business registered at a virtual office outside of the city in which you live, but you mostly work from home, could there still be any business tax implications with your local government beyond just individual income tax requirements? Okay, so business registered a virtual office. So I'm assuming that, okay, you have another office location. You really don't go there because you're saying virtual, so you must not really go there. But that's what where your address is. And then, but you work mostly from home, so you work over here. Could there be any tax implications with your local government? No, not that I'm thinking of. It'll go by where your business is located at. Because give you an example, my own business, um, I use an address over here as my business location, but I have a physical location here that I actually go to, so it's kind of flip-flop. Okay, than what you're saying. I have a physical location here, um, and I pay taxes. Now I'm a S corporation, so I pay my local taxes because federal and state local. I pay my local income taxes for my business to where I'm located, where my address is at, my regular address, my mailing address, my that's what I consider my legal address over there. Um, but no, nothing with the physical location. Now, if you have employees, that's what I'm trying to think as quickly as I can here. If you have employees, definitely, then yes, it pertains to those locations. Okay. It pertains to where they live at, and it pertains to where they're working at, where their physical location they're working at. Then employees is definitely going to matter. So so to answer your question, I think it's going to go by where your business is addressed at. Okay. Any other questions? We still have about 15 minutes, so I'm not sure how many of you are in your startup phase versus, already in business. Um, I'm not sure how many of you have already got your taxes done. If you are an S corporation or a partnership, your tax returns are due March 15th. So get on the ball or do an extension. And then for all of our sole proprietorships, our LLC sole proprietorships, those are due April 15th at the same time as your normal personal income tax return. I'm not a fan of doing extensions because if you end up owing money when you do your tax return later on after like in that extended period of time, yes, they give you that extension leeway and they don't charge you for it. They don't hit you with any penalties or anything. But if you owe money, then you're paying it late. Because if you owe money, it is due on April 15th and there is no extension. Or if you're back there on March 15th with certain businesses, there is no extension on payment, just on filing. So you're going to get hit with penalties and interest if you pay late. So I'm a big fan of just try to get on the ball and get it filed on time. If your accountant is so crazy busy and says, I can't get your tax return filed on time, even though you dropped it off, 2 months in advance, then that, especially if you owe money, that might be a reason to look for another accountant if you're someone that normally owes money. But again, if you have a relationship with that accountant, you could probably work something out with them where they can make sure that you don't owe a bunch of money at the end of the year. They can have you making those quarterly payments. And even if you have to file an extension, if they feel you're going to owe money after that extension period, they could even have you send in a payment before April 15th, so that when you do your extension, if you wouldn't owe money, then if you owe money, it's already been paid. Okay. And if you paid in too much, you'll get it back as a refund. If you didn't pay in enough, you'll pay a little bit of it late. So you can work that out as well. I know a lot of businesses just like the idea of filing late. I don't know why. I know it's not something you like to do, but who likes to pay any bills? I don't like to pay my electric bill, but I pay it on time. I don't like to pay my phone bill, but I pay it on time. I don't like to file taxes, but I'm going to file my taxes on time. So just if you're in business, you just make it happen every year, just like you make everything else happen. Talking about paying something, since nobody has a Q&A up here right now. If you are an LLC or an S corporation, you have to do an annual filing. It's called an annual report through Pennsylvania, or the Pennsylvania Annual Report. If you have not done this yet for your business and you've already been in business for a while, you really need to check it out. Because if you do not do this Pennsylvania Annual Report, which costs $7 each year, if you don't do it, you will lose your business after a few years. This is brand new, just started in 2025. And so they're going to give some leeway. And I think they're saying like 3 years or something, but don't quote me on that. Then they will give you some leeway so that you you have time to file it. So let me share my screen with you. Since nobody's asking a question right now, I'm going to share this with you. Again, this deals with taxes because one, deals with business in general because you have to do it if you're an LLC or an S corporation, but also it's a $7 expense that you get to claim on your tax return, right? So let me share my screen with you. And yes, you should see it. Okay, so this is the website. I'm going to go ahead and copy and put this into the chat once I figure out how to do that. So if you think you need this, you're going to want to grab this link that I just shared with you and copy and paste it on into your own web browser or into a Microsoft Word document or something. But let's do a search here. I'm going to choose a company. Let me think of one here. Let's see what comes up for Fun Central. Okay, just one, and it's in Clearfield, PA. So I did the search. I'm going to click on the name down below here. It's a button I can click on. And then it comes over here and it has information and it has some stuff up here. Okay, so this is a perfect example. Didn't know it was going to show up like this. So this right here. Okay, one, it's an Inc. Okay, and so it's not an LLC. Otherwise, it would say LLC. Does tell me here that's a domestic business corporation. Tells me there as well. Okay, this annual report. They need to click on this and then need to just go through the steps. You could all do this yourself. It's really not that hard. There will be some things you have no idea what it means, like the word governor. I honestly don't know why they use the word governor, but you just put in your business owner's information for governor, name, address, telephone number, stuff like that. Um, but you're going to go through this and you're going to pay with a credit card at the end when you're all done for $7 and then put something in your calendar. Um, uh, put something in your calendar to occur, to reoccur, make it something ongoing, to reoccur every year so that you don't forget to do it. They are supposed to um, send you a um, a reminder, but they've also clearly said that if you don't receive the reminder, it's not their fault, it's your fault. Trying to see what the due dates are for these. So LLCs are due September 30th of every year. And there's another due date. Let's see if I can find it real quick. September 30th. Okay. Corporations, like your S corporation, is going to be due June 30th. And then LLCs are due September 30th. The reason for these annual reports is they want to make sure that you're still in existence. I mean, yeah, I know you already filed a tax return. That probably tells you that they're in existence, but there's maybe you're not filing a tax return. And so they're doing another check to say, okay, you have your name and your business registered with us through the Department of State. Plus some of these departments don't talk to each other. And so you're doing the $7 registration through the Pennsylvania Department of State. And if they find that you're no longer in business because you're just not filing it, then they will close that business organization down. And then what will happen is that name will become available to somebody else someday. Okay, let's see here. Okay, can you repeat what this is called? Yes, it is called the Pennsylvania Annual Report. So let me share my screen with you one more time. So I shared the website with you and then do a search. Let's do a search for another company. So here I did a search for this company that you see on the screen. You should be able to see that. Four came up. This one that says Inc. Let's see what happens. If I click on Inc., I come over here and look, it needs to file an annual report. I need to click on this button right here that you should see on your screen, file annual report, and go through the steps to do this registration. Now they may have, but the previous one and this one, they may have actually already done it for 2025. And so now it comes up and shows up again because it's going to come due later this year of 2026. So you need to keep track, kind of how I showed you all them folders that you can create folders for. You might want to create a folder within your business information folder called PA Annual Report. And within that folder, you would want to save the PDF after you're done filing it, save the PDF into that folder and give it a date like 2026, um, September 1st. Okay, something like that. And so that you can go in there and be like, okay, did I do this? Did I do this? Let's look at this other company that says it's an LLC. When I click on it, it comes up as well. So again, they may have already done it for 2025 and it's just showing up now for 2026. But if you have not done it, you need to do it. And when you do it, you'll be good for 2026 then. You won't have to do it again until 2027 for $7. This is not just a Pennsylvania thing, so I know how people like to get mad at Pennsylvania. Um, or at your own state and wherever you're located at. This registration is very similar to what a lot of almost all the other states in the United States have as well. Their fees can differ a little bit, but it's basically the same throughout most of the states. And they're just wanting to make sure is one, are you in business? And if you're not in business any longer, then they're going to discontinue your business so that the business name is available to other people because there's only so many business names you can have, right? Um, okay. Any other questions? We have a few minutes left. Okay. So I'm just going to wait here a couple more minutes, see if anyone has any other questions. I hope you found this to be interesting. We do this every month, so feel free to come back next month and do this again with us and come with your questions. That's what it's all about. You ask me the question, I try to answer it, you learn from it, I hope, and you walk away with some good information. Otherwise, if there are no other questions, you are free to go. I wish you the best of luck in all of your business endeavors. If you need any help, please reach out to your local SBDC consultant. And if that person cannot help you, they have an office of coworkers that have knowledge. And if they can't help you, we then also reach out to our other SBDCs in Pennsylvania because there's a wealth of knowledge amongst all 15 SBDCs, and we're all sworn under the same confidentiality. So whatever we learn about our businesses, we keep it confidential. We've been around for all 45 to 50 years, and the SBDCs have across the United States of America. And so if we didn't take confidentiality serious, we wouldn't still be here, but we are here because we do. Okay, I think there's another question, so I'm going to go ahead and take a look at it. Are there any other PA tax or document filing requirements for a domestic LLC with a single owner and no employees? No, I think that is it, is your annual report that we just talked about, along with your income tax, sales tax if you have to do the sales tax, payroll taxes if you have employees. That should cover everything. Uh, One thing, let me point this one out, especially because you're saying one owner, and so I see this a lot of times. So, uh, if you're an employee of a business, you get a paycheck, right? And you have all these taxes withheld. Well, if you look at the local section, there's always a couple taxes. There is what we call the earned income tax, which was withheld, and that's normally, depending on your location, generally across Pennsylvania, it's 1%, but in other geographic locations of Pennsylvania, it could be 1.25% or 1.45% or 1.5%. So that is what you're paying when you do your local earned income tax or your local income tax return with your accountant. You do your federal, state, and local. That's what that tax is. But also on your paycheck is what we call LST, local service tax, or occupational tax. Might have some other names, but those are the couple I've seen. Um, and that can range geographically in Pennsylvania differently. It could be $10 in some townships of a county. It can be $52 for the year, $10 a year, or $52 a year. I've even seen some places where it was actually zero, and I've never seen anything different besides 0, 10, and 52. So once you own your own business, you no longer get this paycheck that we're talking about. So you file your federal, state, and local income tax return. And on those three tax returns at the federal level, you're paying federal income tax as well as Social Security and Medicare tax, or together the Social Security and Medicare tax now is called self-employment tax because you're your own business owner. At the Pennsylvania level, you pay your Pennsylvania income tax. That's a straight 3.07%. Okay, everybody pays that. At the local level, you pay that 1% or 1.25, whatever percentage that is for you. But nowhere on those three tax returns do you pay this LST tax or this occupational tax of 0, 10, or $52. And so that is something that catches a lot of small business owners, and they don't pay it, and then they get warnings that letters in the mail saying pay this, and then us people that hate to pay taxes, we just set it aside like, I don't know what this is, just set it over there. Okay. And then you get another letter, another letter, another letter. Before you know, there's penalties, there's fees added onto it. Now they're coming after your checking account, things like that. So with that said, when talk to your accountant that when you're filing your tax return for the year, you could have them prepare you the LST tax form that you can just send in at the same time that you're doing your other taxes. Now, it's not the accountant's job though, because you should get a document in the mail each year that says you owe this tax. So if you get the document, you owe that tax, occupational LST tax, you owe that tax. So just get it paid and you'll be done with it for the year. But if you want to have your accountant help you out with it, they'd be glad to do it for you as well. Um, so I'm going to go over by a little bit, but you're free to leave whenever you want. Again, this is kind of a free will kind of thing, and I'm willing to stick around a little bit longer because I got a couple questions real quick. Could you recommend a good bookkeeping method for a plant nursery? Farm Pro PA Horticulture Workbook. Okay. Um, Good bookkeeping method for a plant nursery. I'm not sure what you mean by method. Yeah, there's cash accounting and accrual accounting. So, maybe that's what you're talking about there. I'd say probably you want to kind of go with cash accounting. It's always the easiest way than what the accrual accounting is. But accrual accounting does do a better job of receipts and things like that. Or not receipts, like inventory and accounts receivables is what accrual base is for. You're saying for keeping receipts, uh, bookkeeping method for keeping receipts. So, I mean, I kind of talked about like the Dropbox, the OneDrive, if you're talking about storing receipts, but there is a bookkeeping software. Let me bring this up and show you this. I'm just kind of grabbing at the stars out there of okay, you're talking about accrual. Okay, but check this out here. Screen one. I'm not sure what you're using for a bookkeeping system, but if you're not currently using a bookkeeping system, you might want to look into PC Mars. The website is just pcmars.com, so you can write that down. That's so simple. It's farm accounting software. It's actually developed by farmers out in the Midwest or Western United States, somewhere out there, and it's a pretty good bookkeeping system. It's made for the farmers, although they do have some for just general businesses as well. There is a free side to it, but then there is a cost side as well. So $80 per year for a set of books, and you can see what it includes at the $80. And then if you need additional things on top of that, then they charge you extra. I haven't looked at this in quite a while, but I do have it as a shortcut on my computer because I tell people about it. So you can jump up. That was $80. Here's $54 for something. Oh, for inventory tracking, enterprise allocation. If you want payroll, $32. If you want accounts receivable, 43, accounts payable, 43. And I do believe, I'm not going to do it right now, but if you added up each one of these and bought all of them for a year, it's still way, 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 way cheaper than QuickBooks. Okay. Now, I'm not saying it's as good as QuickBooks. I don't know that. Okay. I can't speak to that. But if it's made for farmers and it's made in the US, I love it. And so if this may be something that you want. Okay. I'm going to stop my share because I want to see this chat again. So accrual. So yeah, cash accounting and accrual accounting. Cash accounting, I'll just quickly cover it and then we're gonna kind of wrap it up. We can always maybe I'll make this a tax tip for another time. Um, Cash accounting is only claiming income when you receive money, whether it's a cash, check, credit card, money order, whatever. Even if you go out and you snowplow somebody's driveway today, if you're under cash accounting, you don't claim that income until you receive the cash. Now you got to switch gears. Okay, switch gears. If you are accrual accounting, same example. You snowplow today, but you don't receive the money till later. Under accrual accounting, you claim the income when you do the job. When you do the job, whether you got paid or not, you claim it as income. So that's accrual accounting. It's flip-flop. Same thing with expenses. Cash accounting, Cash accounting, you only claim it as an expense when you pay it. So even though you might get a bill in the mail, you're not claiming that as an expense in your program until you literally pay it. Cash, check, credit card, money order, whatever. The contrast to that is accrual accounting. Accrual accounting, as soon as you get that bill in the mail, you count that as an expense. Now, it doesn't make too big of a difference until you get like to maybe the end of the year. So in December, if depending on what you pay out or what bills you receive, you might claim something in December instead of January, or flip-flop depending on whether you're cash or accrual accounting. But again, also accrual accounting does a better job of tracking your inventory and if you do accounts receivables. Now, for a lot of small business, just one second. For most small businesses, especially with the bookkeeping software and especially with taxes, you kind of do a blend of both a cash and accounting. Okay, you kind of do a hybrid. So maybe you claim most of your income expenses based on cash accounting, but maybe you do use invoices still. Even though you don't claim it, you only claim it when the money is received, you still use invoices. Or maybe you track assets. Do you track assets? Do you have, big farm equipment? Because you were talking about agriculture. Do you have farm equipment? Do you have nursery buildings? Do you have vehicles? You count these things as assets. Well, under cash accounting, there is no assets. Under accrual accounting, there are assets. But you're saying, hey, I operate on a cash basis, but I also have assets. So now you're doing the hybrid accounting, or what a lot of times we call tax accounting. Tax accounting is more of a hybrid. So I hope that struck some interest with you in what you were asking about. We can always talk about it again, but of course you can always reach out to your local SBDC consultant for more information, and they would be glad to educate you on this information as well. Everybody, until next time, we will see you back here next month. Take care. Bye-bye.